In just a few months, the US midterms are hitting the market. But if you look closely at Bitcoin historical price action during election years, August has always been a red month. Every single time. And it's not just a bad season. Right now, we are seeing a massive confluence of red flags, hawkish Fed commentary, rising inflation risks, geopolitical tensions, and a multi-trillion-dollar carry trade unrevealing in Japan. Is August about to trigger final leverage flash before the next leg up, or we are heading down to test a 55,000 or even 52 on a Bitcoin? Welcome back to the channel, guys. My name is Mike. For last 7 years in crypto, I learned the one main thing: we do not trade hype, we trade liquidity, macro data, and pure market structure. So here on my channel, we are trying to stay ahead of retail crowd. Hit the like button, subscribe, and let's dive into real market picture. So guys, let's start from a market backdrop. The recent Fed meeting was far more negative for the market than most retail traders realize. 3 of Fed members actually voted for another 25% rate hike, and this is a huge signal. The Fed is making it very clear they will not just sit back and accept inflation hanging around 3%. So if CPI numbers come hot this month, the September rate hikes is back on the table with over 60% of probability. Now here is the wild card that the most crypto influencers are completely ignoring: the Japanese yen carry trade. So that's how it worked. For years, hedge funds borrowed cheap yen at near zero interest rate, sold it for dollars, and pumped that money into US stocks and crypto. And this trade is estimated over $1.3 trillion. But when the Bank of Japan intervenes and the yen rapidly strengthened, these funds faced massive margin call. So what they will do to cover their debts? Obviously, sell their crypto and US stocks, which is the most liquid asset, especially crypto. So let's look at the historical seasonality. In midterm election years 2014, 18, and 2022, Bitcoin closed in August in red every single time. So look, in 2014 it dropped 34% over 2 months. In 18, it dropped 15%, and in 2022, it dropped 16.5%. So is it a magic curse or something? No, guys. August is just a month with low liquidity. Institutional capital takes a vacation, political issues builds up, and retail traders get caught over leverage. So that's exactly why we always see those price drops. So in July, we anticipated a liquidity sweep around $67,000 to $70,000. We got that push to 67K, but buyers failed to hold the breakout. So as long as Bitcoin trades below $67,000, I treat any short-term rally as a massive opportunity for sellers to build positions, not to start a new bull run. Our major support zone right now is between $58,000 and $60,000, but if that support breaks, the next major institutional build zone and our ultimate capitulation target sits between $55,000 and $52,000. So for the true macro bottom to form, I want to see these 3 things happening. An open interest need to drop in between 10 and 15%. Funding rates must turn neutral or better negative. Institutional ETF inflows must become consistent for at least 1-2 weeks. So here is how I am playing this personally. Am I selling my long-term Bitcoin and Ethereum portfolio? Absolutely not. Trying to time the exact bottom with your core portfolio is a rookie mistake. I'm not touching my spot bags. However, on the future trades, I'm gonna close all my long positions, and I'm gonna focus heavily on my new short setups during a local bounce to ride this August wave down. So if we get the final capitulation down to 52,000-55,000 on a Bitcoin, that's exactly where I'm going to buy more to my spot positions. And guys, I do post all my real-time trade setups, macro updates, and key level adjustment in my Telegram channel. The link is in the description below, and drop a comment below with your Bitcoin target for the August. Do you think 58 holds, or are we sweeping down to 52? So subscribe for more breakdowns, stay disciplined, manage your risk, and I will see you in the very next video.